Hello, everybody. Hope you're doing well. Nice to see you again in a valuable video. Today, we're going to be talking about a super important concept, which is liquidity and how you can trade it. Okay, guys? So let's go. Okay, so first off, we got to understand what is liquidity in the markets and how can we take advantage of it to make money. Okay, so basically, liquidity is found in the highs and lows of the days and the previous days, right before a market open. Okay, so for example, the NYSE session. Okay, so liquidity basically it's the areas in which it's going to be a lot of pending orders. Okay, so it's going to act as fuel for the market to be able to push or to move in an opposite direction. Okay, so think about market being a vehicle or a car. Okay, and liquidity, it's basically going to be the fuel. It's the fuel that is going to make the market move. Okay, so this is an example of a selling opportunity. Okay, so this yellow line, as you can see, it's going to be the market open. Okay, so remember the liquidity areas, they're going to be above the previous highs. Okay, so if you look to the left, you're going to have this is the previous high right before the market opens. Okay, so you just got to wait for market to make a fake out or a manipulation and then break structure to the downside. And this is the area in which you want to execute your trade, and market is going to go to the opposing liquidity area, which is going to be the low of the day. Okay, guys, so we're going to see a lot of examples with real chart data. Okay, so this example is going to be for a buying opportunity. Okay, so let's say this is your market open time. As you can see, this is the previous low of the day if you look to the left. The only thing you gotta do is just wait for a fake out to happen, okay? Fake out or manipulation. Next you gotta do is identify where are you gonna enter. And then you're gonna identify where is gonna be your TP, which is usually gonna be the opposite liquidity area, in this case, the high of the day. Okay, guys, so let's go and see some examples. Perfect. Okay, guys, so this is NASDAQ 5-minute chart. As you know, I love to trade the NASDAQ and I do trade in the NYSE session. Okay, so this is right before the market open. So what you want to do is just look to the left. Okay, always look to the left and identify where are your liquidity levels. In this case, it was the previous daily high. Okay, so you put a line right there, and the only thing you do is just wait for price to make a fake out, and then we're gonna take our trade. Okay, guys, so let's see. Okay, perfect. So market did open, and usually I wait for the first couple of minutes to wait for the manipulation, choppiness, everything. Okay, so you just gotta wait for the market to give you the clues that you need in order to take your trade. Okay, so let's continue. It already closed back below. Okay, so it did made like a double top, as you can see, guys. So now we are going to take our sell entry. We're just going to wait for a beautiful confirmation, and we're going to take profit, which is to this low of the day, and then you can leave some runners. Okay, so as you can see, it already left a imbalance area, which means price is going to come back and fill it. Okay, so that's going to be our entry, because as you can see, guys, let me highlight. As you can see, this low got broken and also this low got broken. Okay, so basically that's your change of character. Okay, and this is going to be our entry, stops above the candle that left this imbalance area. Okay, all of this is your entry area. Okay, and just to be safe, this is going to be our stop loss, and our take profit is going to be right below the low of the day. Okay, so let's see. We got filled. Beautiful. Okay, as you can see, this trade was a 3.64 risk reward. Okay, and what you can do is just close on partial positions, let's say 90%, 80%, and you can just leave your position at stop loss at break even and just let it run. Let's see how far this trade goes. All right, that would be enough for me. Okay, so let's see what was the maximum run in this trade. It did drop to a maximum of almost 200 points. Okay, guys, so let's continue with the examples. Okay, guys, so this was the next day. As you can see, we had a previous day high and also the current day high. Okay, so we can extend this line to the left so that you can see that it matches exactly the previous daily high and also the current daily high. Okay, so if we continue, we just need to wait for price to make a manipulation and a drop. Okay, so we are close to market open, so let's just wait for a fake out and we can take our trade. So as you can see, guys, this was a huge liquidity of rejection from this liquidity level, which was the previous daily high. Okay, so there's two ways we can take a trade in here, which is entering right at the close of this candle and stops above, or a sell stops below the low of this candle. So that way, when price is breaking, we can take our sell and stops are going to be kept above this liquidity level. For this example, we're going to take a sell at the low of the day. For this example, I'm going to take a pending sell order at the break of the candle's low, okay? You can either target the low of the day or at least a 1-2 risk reward or a 1-3. Okay, guys, so let's see. Okay, so there was some news going on. So as you can see, there was a huge drop. There was some news going on, guys. So basically, if you look to the left, we had clean traffic. So market is like a mirror, okay? So if you have this type of candles to the left, then you're gonna have a very similar push, okay? So another successful trade. Also, if you would have entered at the close of this candle, it would have been a very successful trade. We got a 1-2 risk reward ratio. Let's go for another example. If you want to find consistency, guys, and you want the guidance from a professional trader, which is me, okay, I'm going to be able to help you, guide you, mentor you. You can talk with me and you can access my strategies and videos. Okay, you can find them, the link below in the description. Okay, currently there's a discount. I have very highly effective strategies and systems with very high win rate. I have helped hundreds of students, okay, how to get precise and sniper entries, large risk reward trades. Okay, guys, so you can go and check out the link below. Let me know, we can chat and I can help you. Okay, let's continue with the video. Okay, this is the next day. As you can see, when you have equal lows or triple equal lows, that's a very important liquidity level. Okay, so we mark that with a line. As you can see, we are almost at the NYSE market open. We just need a fake out. Let's continue. I had this huge candle. As you can see, we had this liquidity wick. Okay, explosive bullish engulfing candle. Obviously, there was some news. So now what you gotta do is just wait for a precise entry. Okay, you can wait for 50% retracement, or you could have entered at the break of this candlestick. Okay, just as we did before. Okay, you can measure the 50% of this imbalance. So as I told you before, imbalances are usually filled. Okay, or it can come back to the 50%. Let's see if we get an entry. Okay, we got filled, guys. Let me remove these fibs. And our take profit got just hit. Okay, so that was pretty simple. As you can see, we just entered at 50% retracement of the imbalance area. And I targeted these highs. Obviously, you can target the high of the day, which was around that area. Okay, but for this purpose of this video, it was a 3-to-1 risk reward. Okay, as you can see, guys, this was the outcome of that trade. It was a huge monster trade. Let's see. So as you can see, this liquidity concept, it has a huge advantage. Okay, so you can incorporate this in your trading arsenal. Okay, here's another example, guys. You look to the left. This is right before market open, and this is the current high of the day. Okay, so let's see what happens. Okay, we have this little candle rejecting. Okay, now we have this drop, same thing. It broke this low and this low and even this low. Okay, so now we have this imbalance area. So this is going to be our entry areas. So we can apply the same concept as we did before, and we can take our sell at the 50%, and our stop is going to be above the candle that creates the imbalance. Okay, and for target, we can go for at least a 102 or 103 risk reward ratio, or we can target the low of the day, which is around this area. Okay, so let's see if we get our trade. Let me forward. Okay, so now we got filled. Okay, and we did got TP. Beautiful, beautiful trade. Let's see how far it goes. This trade was a almost 1-4. Okay, so guys, this liquidity concept is insane. Okay, you just gotta keep it simple and make sure to have a precise entry strategy. Okay, and if you want to learn more, obviously you can check the link below. Okay, and I have a lot of concepts that cover these precise entries. Okay, guys. Wow. So you can see market just melted. Let's see how far did it go. Insane. You see 1 to 13 R. That's crazy, and it just keeps going. Okay, but let's go to another example. And as you can see, guys, like I'm not even cherry picking the trades. It's just like one day after the other, as you can see, just one day after the other. Okay, in the end, we're gonna measure how many trades we took and the risk reward. Same thing, we look to the left, we have the high of the day. Also look to the left, we have the previous also liquidity level, buy side liquidity. Okay, so we just wait for the market to make a fake out or manipulation. Okay, guys. Same thing, in this case, since we don't have any imbalance, we can just take a sell. That's what I'm gonna do. And we can keep our stop losses above, and our TP, as you know, we can go for a 103 at least. We got filled and price is dropping and it hit our TP. Okay, another successful trade, 103 risk reward ratio. Even if you lose, guys, like you are protected because you're taking high risk reward trades. Okay, so let's see how far did it dropped. Obviously, it reached the low of the day, which was this level right here. Let me see how far that was. A 1 to 5, around almost 160 points. But man, like market is just dropping. Let's see how far did it go. Almost 300 points. Guys, market has been beautiful, blessed lately. So you gotta take advantage of this because you don't have this amount of volume the whole year. Okay, guys. So this is the time in which you want to make money. So let's continue for another example. All right, so another example, we can look to the left. This was the next day, okay, from the previous trade we took. Okay, so we marked down the low of the previous day. That's going to be our liquidity level. And we just wait for market to give us a fake out and an entry. Okay, so let's go. Okay, so price already made a fake out. As you can see, it's closing back above. Okay, so there's many ways that we can take our trade, but I go into detail about that inside the course. Okay, so we set our entry and we can target the next liquidity level, which the most obvious level would be these highs right here. Let's see if we get filled. Okay, we got filled, guys. And you are protected because your stop loss is below this low of the swing. Okay, let's continue. Remember, we are targeting a 1-2 risk reward. Okay, and target reached. I hope you like this video, guys. Remember to like and subscribe. Let me know what you think. And don't forget to check the link below and see you in the next one. Goodbye.